Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bullish harami yesterday as the market reacted back up once again to the recent constant prodding of the broken lower time, currently 101.23, of the January to May 2021 bearish Andrews pitchfork by pushing up and over it, as well as the November 2002 high at 101.70. Forgive me, but does not the last 3 weeks look just a little bit like a possible bull hammer with potential up to the current February to date downtrend area, currently 104.18? If it doesn't, never mind, maybe it is just me. Anyway, just a reminder of my recent admonishments of caution on breaking either below or above the upper tine, or in this case below the lower tine of pitchforks. You see, back at the start of the year, the market broke up over the upper tine for a full week, but then mended the break and continued to use the pitchfork in an orderly move lower. Likewise, 3 weeks ago, prices broke down through the lower tine, but started to mend itself last week. Hence, caution on any break below. That being said, looking below, we have the support of the interesting 61.8% Fibonacci line at 99.15 and the primary target X for the imperfect descending triangle at 99.05. The secondary harder to reach target X1 is down at 96.10, and that's below the bottom of my chart. Meanwhile, above the recent highs of last week, which seems to be an interesting series of choices, above the 102.50 to 102.80 area, we have a fairly clear area until the congestion between 103.38 and 103.69, with the notable levels being the January low at 103.38 and the December 2016 low at 103.49. So far today, small move higher, then lower, below the November 2002 high, down to the short moving average, currently 101.50, and looking like an immediate countering bearish harami right now. Cable, aka sterling against the US dollar. Continuation higher yesterday from the recent break above and outside the upper tine, currently 119.67 of the late April to late May bearish shift pitchfork. This is still a significant move higher, as this bearish pitchfork has shown the way lower for nearly 2 months. It also puts at risk the harder to reach target X2 at 115.30 for the recent diamond pattern. Anyway, this move higher yesterday also has its own significance. Prices punched up not only through the immediate resistance of the May 2020 low at 120.73, but also through the next resistance at 121.54. The day ended with prices closing right on the 121.54 level. Overhead, we now have the interesting June 2020 low at 122.48. This one is interesting because it has the slowly declining short medium moving average, currently 122.40, entwined around it. Plus, we haven't had a close over the short medium moving average since February. I'm now considering retiring the bearish shift pitchfork and target X2. So far today, a further move higher, exceeding yesterday's high, but ever so cautiously, and then a pull back down and looking like an indecisive spinning top right now at the moment, possibly a tweezer top, but that's too early to say on that yet. Euro sterling, a fourth bearish black crow yesterday, a confirmation of the move down through the 3 support levels that I have now become resistance levels from the last few weeks. They are the flatlining medium moving average, currently 84.66, the flatlining long moving average, currently 84.42, and the September 21 to date broken downtrend, currently 84.19. The last of these saw the market open underneath it, test up to it and be rejected, and then move down to just shy of the March to date uptrend, currently at 83.71. These two trend lines are interesting, as it means the market has completely moved back within the November 21 to date extended diamond pattern, potentially something that is worth noting, as it makes redundant the remaining potential targets for this pattern. Thus, target X3 above, the secondary and harder to get target in the 88 even area, will be retired after this commentary. Now, whilst I am at it, I will also retire the following targets above after this commentary. Target X4 ambitiously up in the 88.65 area off the top of my daily chart, and a really big ask for the very large falling wedge pattern, currently 84.19 to 88.89, and that was formed many months ago. The target X1 in the 87.65 area for the harder to reach second for the recent smaller lopsided diamond pattern. Then there are the targets for December 2021 to May 2022 reverse head and shoulders pattern. Primary target X5 in the 87.75 area and a harder to reach secondary target X6 in the 88.65 area. Targets X4 and X6 are currently just off the top of my daily chart. After this clean out, we will only have one potential pattern left, possibly one, maybe two. This is from a more recent pattern, a late March to mid-April based large ascending wedge pattern, currently 88.36 to 86.79. And unlike the others, it is a contrary one, a bearish pattern, and one that is now closer. This still has a seemingly harder to reach target X7 down in the 81.15 area, right off the bottom of my daily chart. One final point. I've asked over the last couple of days for you to think about whether the action seen since late June to date is possibly forming a bear flag pattern. Well, it seems a likelihood, especially after the break and close below the 8400 area. This now has a possible target X8 below in the 8300 area. Now, so far today, well, a further move lower, down to test and breach at the moment the March-based uptrend and the base of both the lopsided and extended diamond patterns below. It now depends where we will close tonight. US dollar against the Indian rupee. An indecisive spinning top yesterday with a long tongue on top, but barely managing a different close to the previous session. It was nevertheless a second close over the old 100% projected Fibonacci line of 79.81. This projected Fibonacci line has halted the recent overall pullback from the all-time high made 2 weeks ago. Meanwhile, above, we still have the harder to reach secondary target X1 up in the 80.43 area. This is for the recent bullish measured move higher. Yet overall, the market is still in between the overhead middle time, currently at 80.74, and the lower time below, currently 79.28 of the January to early April bullish Andrews pitchfork. This bullish pitchfork has been running the bullish angle attack of this market so very successfully since the end of the first quarter. So far today, a curious open below the 100% projected Fibonacci line with a move above and below, and then moving further down to test the short over below the 100% projected Fibonacci line and lower just a little, and seemingly starting to test the rising short moving average below, currently 79.64. It looks an interesting move today given what's been happening. I'll be very interested to see where we close tonight, because we really don't have that much support until we get down to the lower time when we bust through this short moving average. US dollar against the Brazilian real. A bearish opening long black Mariposa yesterday, coming as it did after an indecisive spinning top and a prior bearish open and close long black Mariposa. I think it has a certain symmetry. The move down was in a fairly clear area until the two 50% Fibonacci lines of 527.37 for the May 2020 to April 22 move, and at 522.76 for the March 21 to April 22 move. Now, in between them we have the flatlining long moving average, currently at 523.39. Well, the market punched down clean through the 50% Fibonacci line at 527.37, but halted at the long moving average. It makes me wonder if there is maybe more to this decline than initially I'd seen. You see, looking at the larger picture, we still have a potential topside primary target X in the 568.85 area and a harder to reach target X1 off the top of the daily chart in the 584 even area, both from the March to July ugly double bottom pattern, though this recent action I'm sure has put a severe dent into that idea. Overall, the bullish Andrews pitchfork is still alive and well, with the market in between the lower time below, currently at 517.79, and the middle time above, currently 550.62. I urge you once again to keep an eye on how the market continues or not utilizing the bullish Andrews pitchfork as its principal bullish angle of attack. US dollar against the Mexican peso. Wow, Wow, when I last looked at this pair yesterday afternoon, this market was on the verge of making a key reversal up, which would have countered the selling we'd seen in mid-July, well, since mid-July, as certain participants here had tried to not only punch down through the flatlining long moving average, currently 42.24, but also closed below it. Well, you can see what change we've seen, as yesterday turned out in the end not only to be a key reversal down, but also the first close below the long moving average since we started this episode. Interestingly, the action could also be seen as a large indecisive spinning top, but I'll leave that aside for the moment. So with all this happening, it's interesting to see that the market is still in between the middle time above, currently 20.79.33, and the lower time below, currently 20.28.18, of the late March to late June bullish shift pitchfork. We also have overhead the combination of the neckline of the September 21 to February 22 head and shoulders top, currently 20.62.09, and the interesting 61.8% Fibonacci line of the July 17 April 20 move at 20.60.62. Beyond that, we have the neckline, currently 20.74.50, of the mid-March to early July reverse head and shoulders pattern, as well as the 50% Fibonacci line of November 21 to March 22 move at 20.78.02. Now, meanwhile, looking below, we are fairly clear until the lower time, which is interesting as the market avoided testing it yesterday. Below that, we have the interesting dance being conducted between the medium moving average, currently 20.15.88, and the short medium moving average, currently 20.14.68. So far today, well, a small test up to long moving average, but then a rejection back down, yet also a further avoidance of testing that lower time below, and looking like an indecisive spinning top or indecisive doji cross possibly for today. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.